Alright guys, trailer for here, it's been a while, right? But as promised, right? I'm gonna show you guys how I trade US30 on a day-to-day basis. It's just gonna be a short video. I've been backtesting US30 for like 2 months, right? And I wanna show you guys how I basically trade US30 and have a 90% win rate, like every day. You get me? Every day when I trade, that is. So I'm on the daily time frame, but I don't really use the daily time frame to trade US30 because I don't really hold US30, right? I don't hold US30, so I just take trades every morning at a specific time, right? So but you can look at the daily time frame for like the overall trend, but once you're on the 1 minute time frame, the overall trend doesn't from the daily time frame don't really mean anything. You get me? You don't want to confuse yourself, because on the 1 minute time frame, this little wick here can be a huge deal. You get me? This little wick, all of this little wick can be plenty amount of pips. You get me? So you don't want to confuse yourself on the daily time frame if you're trading on the 1 minute time frame. Worse if you're not holding trades. So if you look at the 4 hour time frame, I will look at the 4 hour time frame just to get the 4 hour time frame direction, right? So what I see on the 4 hour time frame, remember, it's in an overall uptrend, right? So I see this huge order block here, right? So the market obviously mitigated something over there. I don't even have to go over there. But once you see these order blocks looking like this, a liquidity grabber, boom, order block aggressive to the upside, we know that something has been mitigated. So what we're looking for is the market to actually come back to mitigate what was being collected from this order block, and this is what happened right here. So this was like 0.9, right? This was like 0.9. So I only take trades 0.7 London New York session, right? So let's go on a lower time frame on the 1 hour to see things better, right? Because remember, we don't hold trades, we just basically intraday or scalp. So from here to here would be classified as intraday. Like a 5 minute trade, I'd classify that as a scalp. And you can scalp US30 because 2 minutes can be so much. You get me? 2 minutes can be so much on US30. So on the 1 hour time frame, we realized that we had this order block here that went to mitigate, right, on the 4 hour time frame. So look at this. So this order block to this order block. So right here we have money transfer. My student would know about this, and persons that are familiar with smart money would know about money transfer, right? So we had money transfer here, which means that money has been collected from this order block here, right? So now the money is in this order block here. So what we're looking for is the market to actually come back to this order block so we can get another mitigation, and this is exactly what happened here. The market came back and we had a mitigation, right? Now if you look at this time right here, this is actually 0.4. That is not my trading time. I'd be sleeping then, right? When I trade US30, because I've been looking for an easier way out. I don't want to be up 0.2, then wait for 0.4, then wait for 0.7. No. So I've been back testing this pair to see what is the best time to trade this pair where I can get more sleep, more rest time, more time for everything. You get me? So I would wake up like not really wake up, but I'd start looking at the market like 0.7, not to take entries, but to just see what the market is doing, the direction, everything, how it's reacting to certain area, maybe an area that I set from last night or whatever the case may be. But majority of the times I normally analyze 0.7. I don't normally analyze overnight because I don't know what the market will do, and I don't want to analyze the market and then stuck in one bias, because you know that most of the time you analyze a chart, say overnight or over the weekend, it doesn't matter what the market is showing you. You could analyze for a buy and the market is showing you that it wants to sell, and you're just stuck in your buy bias because it looks so good, and you analyze it from over the weekend or over the night. So you basically stick to one bias, and it's when the market actually play out, then you say, shit, the market actually wanted to go down. It gave me all of these signals and whatever, but I was stuck in one bias. You get me? So you don't want to do that. You want to analyze the market when the market is liquid, so you see exactly what the market is going on with at that time, and you just work with it. You get me? So the only thing I would look for is overall direction. So once the market is playing out along with my overall direction, then it is safe to look for buys or look for sells, whichever. You get me? So let me go on a lower time frame now, right? Because remember, we don't trade on the high time frames. We just look for the overall direction of the market, right? So remember, we had this mitigation. So we collected the money, right? Notice this huge bear candle, and right after this bear candle, we have buys, right? So what this is saying is that the institutions basically dump money here to actually mitigate. So this was only for the purpose of mitigation, not a momentum candle. You get me? So if you notice what happens here, the market created this order block, and then we had this gap. Market push up aggressively, which means that, remember, when you have an order block, so this order block here mitigated this inefficiency area over here. So let me draw that right here. So we mitigated this area, right? However, the market failed to push down and then play this order block to continue down, right? So instead, the market continue up, right? So we had this aggressive break. Normally when you have an order block that is broken, we normally use it for entries in the opposite direction, right? So this now becomes my area of interest, right? So this is my area of interest, and if I have my area of interest here in the 5-minute time frame, right, it means that I'm going to look at the 1-minute time frame for entries within my area of interest. You get me? All right. So perfect example of what I was saying about stuck in one bias. You see this huge drop here, right? We know that we're looking for a mitigation here, but you see this huge drop, so you're saying like, okay, momentum shift to the downside. I see this inefficiency here, right? And I see this order block form right here. So we're looking for sells, right? And you would have lost a trade here, and then you probably lost another trade here because you're looking at this order block to take entries because you're stuck in one bias. So you're looking at everything to take a sell, right? So you maybe look at this inefficiency again, you look at this one, and then you look at this order block, and you lost 3 trades because you're stuck in one bias. Wait and look for what the market gives you. Remember what you saw in the higher time frame, right? Remember we saw a mitigation in the higher time frame, and we're waiting for that mitigation. Now we have it, so the market must give us a big push to the upside, right? So this is my area of interest. So I go on the 1-minute time frame now, which is the time frame that I trade on, right? I look for inches and everything. Now remember, I start looking at the market at 7, right? So right here. So this is when I start looking at the market. I don't want to look before. I don't want to get triggered in any trade. I don't want I don't want any temptation, anything like that. You get me? So I start looking at the market at 7, just to help me to stick to my rules. You get me? Because we as traders, you know that you're looking at the market and you see a nice setup, you're gonna want to go in it. You get me? And I don't want any temptation. I want to stick to my rules. You get me? So right here I can see where the market is farming a nice little C cup right here. What this indicates to me is divergence. So basically the market is pushing down, but on a divergence is supposed to be going up. You get me? So something similar to this. So we're going up. Alright, so that is one confirmation. Alright, so look what happens at 7 o'clock, right? So we have this breaker structure here, right here. And then we have the market came back and retest this order block here. Of course, you could take an entry here. That is a valid entry reason. You get me? But remember, we're sticking to our time, right? So I look at the market at 7, but I take entries at 7:30 because of a specific thing that happened at that time, right? So if the market is going in an uptrend at 7:30, you normally the market gets aggressive at 7:30. You get me? So normally we have the market, if it's going up, the market normally push down to mitigate something, right? And then push up in the direction. If the market overall direction is down, it push up to mitigate something and then push down. You get me? So I normally wait for that push to get in the trade, and then I hold it for a few hours, a few minutes, whatever the case may be. You get me? So you could take an entry here, but how often does the market give you a nice entry at 7 as opposed to 7:30? So I find that most of the times the good entries are at 7:30, right? Sometimes you get entries at 7 and the market push and stop you out because of the aggressive move that happened at 7:30. So because you see a one entry one time, you're gonna start looking at 7 o'clock as well. No, just stick to one time, which is 7:30. You get me? And this is Eastern Standard Time, guys, for who is overseas. You get me? All right. So yes, this could be an entry, but no, we're sticking to our 7:30, right? So at 7:30 now, which is here, boom, 7:30, right? We see the market did the same thing, right? We have a breaker structure here, right? We have a breaker structure. Oh shit. Yeah. So we have a breaker structure there, and look at this. So we have, let me zoom in. So we had this huge candle right here that pushed down with a good momentum, right? So we'd say that this is an aggressive move to the downside, creating this order block. But look what happened. This order block, even though it was aggressive, the market still broke through, right? So the fact that the market broke through, it tells me that the market, the momentum is stronger to the upside, right? So this order block right here failed, right? So the order block failed. So this now would be my area of interest to take the trade, right? All this area right here. Reason being, I wanted to cover this candle that actually initiate the move to the upside, right? Now with candles like the zones like these, when you're taking entries, even though it's not that huge, but you try to get 50%, right? You get 50% of that. Now this would be your entry right here. A stop loss below this little zone, 8 pips, right? Easy. Now my target would be the equal highs above here. So I know that the overall direction is up and I can hold it all the way up here, but I am not holding any trade. So my first target was this equal high, depending on your stop, depending on your lot size, 2k, 5k, 10k out, depends. You get me? Easy. So this was my take profit. And once this area, based on the amount of liquidity that is above, once this area is broken, then the market will definitely continue. But what you don't want is the market to actually hit this area, because I have a point of interest within here, actually this area wick out and then push back down, right? So I'm going to show you guys what I do in these cases, right? So after getting this entry, we know that the market is going to either go in one direction or push up to mitigate something to get that retracement, right? So as I said before, I know that if it break here, it's going to continue to push. So this was my first entry here, 7:30. We're still in New York session, so obviously we can get more entries, which I call continuation entries, right? So I took entries here and I'm out of this trade as secure profits. Now I'm going to use back some of that profit to take a next entry. You get me? I'm not going to use my capital, so I'm going to use back the same profit, some of it, a percentage, maybe 10%, to take another trade, right? So let's go back on the 1 minute time frame, right? Because that's our time frame that we look at entries. So over here, I can see this order block right here on the 1 minute time frame. Reason why I look at this order block is because we have an inducement right here, right? So this is the only valid order block that I am seeing here that the market could actually mitigate from. So once the market break above this order block, if it breaks aggressively, then we're looking for the market to actually come back within this area. So something like this. So if you break this order block aggressively like this, we're looking for the market to come back to this same order block here to actually give we a mitigation to the opposite direction. You get me? So let's look over here now. So this is exactly what happened. So the market broke aggressively, right? And this right here, from right here, would be your entry from this aggressive candle. But if you guys look here, we see that there was an inefficiency gap right here that wasn't filled. So when taking entries here, you have to highlight all of this area, so from this zone, and highlight the inefficiency as well. So reason being is that you don't want to take your entries, here, have your stop loss below the structure, and then market tap out on you. You get me? You don't want that. You don't want the market to just stop you up by a pip and you lost $300 when you could have just extend your stop loss. You get me? So if you were gonna use a 0.20 lot size, you use a 0.10 and just make your stop loss a little wider. You're risking the same amount, right? You're risking the same amount. So don't let greed take you over and you say, oh, but I'm gonna make more money with a 0.20. But if you lost that trade by a pip or pipet, you get me? Those things happen. So majority of the time, just extend your stop loss, reduce your lot size. Simple as that. It's not gonna kill you. It's better to profit than to lose a trade. You get me? So my target for this trade would be the next equal highs, because all of this right here is liquidity. So I'm looking at this area here. Boom. Even though the market passed and gone, right? But this is what I am looking for right here. So all of this move wasted or whatever, sometime I close partials and let the rest run, but majority of the time I just take all my profit. You get me? I just take all my profit majority of the time, even sometime before it reach take profit. You get me? Based on reasons that I see. You get me? So as I said, I trade this pair 7:30, right? I start looking at the market at 7. You get me? And I just use strictly 1 minute time frame. I just use the higher time frame for like direction confirmation. You get, and I don't even have to use that because all of this detail, let's say this, all of this detail can show me what to do at 7, right? It's just to know where to take profit and stuff like that. But as I said, with US30, you just need a few push. That's all you need. So you can even use the 1 minute time frame without even looking at any direction. You get me? Any direction at all. So yeah. So let me go back. Let me go on a 30-minute time frame and just show you guys another trade. So let me look for another 7 o'clock. 19:08:07:30. Alright, let's look at this one. Alright, so 1 minute. Yeah, this was a trade that I caught also. You get me? So if you notice, this trade mitigated before, right? So we came back up, we had this breaker, so we had all of this order block that didn't broke. You get me? And the market came back here before 7:30 and then top out. But you know that once the market do this 7:30, this is basically giving you the direction to push down. You get me? And then market just push all the way down, right? In this case, the market came to mitigate, because remember we're in an uptrend, so you could have even gotten another entry back to the upside here. Took out liquidity here from these wicks over here. Market created nice order block. You got the entry right here as this order block close. Based on how the order block close, majority of the time it won't come back far to actually mitigate. So you could take an entry stop loss below here and market push all the way up, right? And New York session is the ideal session for US30. Ideal session. I don't see no other session that US30 moves like New York session. It also moves 2 p.m. 2 p.m. in the evening. Right, let me look for another one. Let me look for one here. 07. Alright. Look at this one. And trust me, these little moves, these are what you want to catch. You want to, on the 1 minute time frame, you want to catch when the market is liquid and you're just getting pushed. You don't want a lot of retracement like this. So this is mainly why I trade 0730. You get me? Because at this time the market will just push in one direction for a period of time. You get me? One direction. So look at this now. So this is 7. Remember, we look for trades at what? 7:30. You get me? So 7:30 right here. So look what happened at 7:30 now. So we see the market creating these order blocks, right? Getting mitigated. So we have this order block got mitigated by this order block, right? So we had money transfer right here. So we had money transfer here, leave us with this order block. Notice we had a small order block here to push to the downside, but obviously that failed with this huge order block right here. So that now becomes our order block to the upside. So all of this area right here would be our entry, right? So 50% of that based on the size, so it would be somewhere here, right? And stop loss below the order block, because remember we can test anywhere on the order block. You get me? And then push to the upside. Target maybe something in here. So we had this as an inducement right here, and then you could maybe have your TP here, or you can TP even here if you don't mind. You get me? Easy trade. And then you're out the market, or you can look for entries back to the downside based on the overall direction of the market, because we're still in London session, right? Majority of the time I catch a move to the upside, I either catch a continuation or I catch another trade back down, but I don't normally hold trades on USA. So this, and I'm out if I catch this, and I'm out just like that. So yeah guys, so that's how I trade US30 on a day-to-day basis, right? I hope you guys get something from this video. You can apply it to different pairs as well, because most of the major pairs, those are the pairs that trade pair with USD. Most of them moves in New York session same time, right? EU moves with US30 just the same. I'm not sure about GU because I don't trade GU, right? So it's just US30 and EU, but majority of the pairs, majority of the majors, they do the same thing. They move that time. So So you guys can apply this to your charts if you're not even trading US 30. All right, guys.